Do you remember when I used to go outside and shoot these videos? Would that I had the time. Today I'm going to be talking about business property relief, a fantastic little relief which saves you money on inheritance tax. Now, in order to benefit from this, you have to hold some qualifying assets. Now, those are defined as either shares in a business which you manage and own yourself, or shares in an unlisted company. In other words, one that you don't run and manage yourself, but which you own because you own shares in them, but they must be unlisted. Now, that's a bit of a problematic definition because shares listed, for example, on the alternative investment market, the AIM index, well, they are listed, but they're unlisted and therefore they qualify for BPR. All very strange, don't worry about it. Now, you will benefit from business property relief on the money you hold in those kind of assets as long as you have held them for 2 years prior to the date of death and you still hold them at the date of death. As long as you meet those criteria, the money you hold in those kind of shares, those qualifying assets, will be free from inheritance tax. Now, it doesn't just apply on death. You can also get business property relief on this money if you pass the shares in the business that you own and manage to your beneficiaries before you die. Now, again, you've got to have held them for 2 years prior to the date of you giving the money, but your beneficiaries have got to continue running the business as a going concern just as it was when they received it from you, and they've got to do that until the date of your death, or for 7 years at least, because then after 7 years the gift is outside your estate for inheritance tax reasons anyway. Now, as with any good idea, certain investments, packaged investments marketed by investment companies and by advisors have sprung up to take specific advantage of business property relief. Now, they're not a bad idea, but I do worry that they're a little bit contrived at times, and just maybe the way they benefit from business property relief might be withdrawn at some point in the future. But as it stands, they're not a bad idea, as long as you bear in mind just a few things. Firstly, you need to know what's underneath these packaged investments. You will be buying shares in an unlisted company, a company which is trading in some way. You need to understand what the company is actually doing underneath everything. It's a golden rule of investing. Always know what's going on underneath the bonnet. Secondly, you need to understand that the investment may be illiquid. It may be difficult for you to get your money out when you need to. If there are problems with that company that you're investing via this packaged investment, then you may not be able to get your money out because you are investing in shares after all. If there's nobody there to buy those shares, you may have a problem. And remember that business property relief only lasts as long as you hold that money. If you need to take the money out and spend it on a holiday or a new boiler or something, then you will lose the business property relief on it. You will lose the inheritance tax benefits. But other than that, remember, business property relief is a fantastic relief, really useful. Use it with caution, know the rules around it. There's more on this on the website, so do check it out. Just search for business property relief and fill your boots. Enjoy. Thanks for watching.